Hey, what's going on, guys? It's Henry back with another video, and in this video, we're going to be talking about put debit spreads, how to open them, why I think right now is literally one of the best times to open up a put debit spread, and specifically a put debit spread or a bear put spread is going to be betting that the stock market is going to fall or a certain position is going to fall. Okay, so I do want to show you an example, and the reason why I want to do it right now is because we are somewhere at a high in the market. So if I go to Shiller PE, right, this is Robert Shiller, a famous economist. You can see right now the Shiller PE ratio is 31, which is pretty high. And then if you look at the S&P 500 PE ratio, it's at 26, which is not really cheap, and we all know that the stock market has been going up a lot. Now, I do want to show you a specific stock that I plan to open up, which is going to be Nvidia. Now, we're only going to do two steps here. We're going to be doing step number one, which is selling a put, ideally 1 month out. Okay, not 1 week, not 2 weeks. With put debit spreads and many other spreads, I am favoring the monthly strategy nowadays. I think it's a lot less work and it's still about the same amount of income. Now, step number two, we are going to be buying a put option higher. Okay, I'm going to open that up in just a moment, but the stock we're going to be using is Nvidia. So, when I look at Nvidia, it is really up there. I mean, this stock, if I go to the chart, I'm going to show you the technical analysis that I look for. Okay, you can see that the volatility has increased, and that's why the Bollinger Band that I'm using here has also expanded. I mean, it was really narrow, and then it went boom like that. Now it's really, really big, and it's expanded, and that's because there is a lot of volatility happening. And then recently, Nvidia stock has continued to climb higher. However, the volatility is now a lot more predictable. And for that reason, I think this is an interesting stock to trade right now. Now, you will also notice that the RSI right here is currently sitting at 70. So this is around, more of the overbought range. In fact, if I expand this right here, you can see that the green right here is 80 and we're currently at 70. So I don't personally think that Nvidia is going to keep going too much higher. It's already a really expensive stock. The top right here is around 465. Again, we can go higher, but I am already using a Bollinger Band of 20 and 3. I've seen this happen on OptionsFi. They're recommending call credit spreads on Nvidia, but for a change, I actually want to be a little bit more aggressive and show you guys a put debit spread, which I really rarely talk about on this channel. And also, speaking about something else that's really rare, if you go to my description, the first link in the description is my Discord community, but we're actually full for the next week. So if you want to check that out, make sure to wait a couple days and then you can schedule a free call. But right now, it is actually full, which is quite interesting. Okay. But let's go to my portfolio on Robinhood. This year is pretty good so far. Obviously, we are in a bull market. The market just continues to rise, which is really good. I mean, I'm very happy, but I'm also very cautious because as the market continues to rise, I mean, it's unlikely to, go to Mars. We're not going to Mars yet, right? So the stock market is going to have to come back down to reality at some point. Again, looking at the PE ratio, it's pretty high. So let's go to Nvidia stock. Given all those reasons, we are going to open up a put debit spread. And again, step number one is we're going to be selling a put option. And then step number two, we're going to be buying a put option. And from there, it's really all about the management. How do we close this strategy? How do we take profit? At what point are we going to close it? Okay. So let's go ahead and take a look. This stock did go up to 472, and this would have been the perfect time to open up this trade on Friday, actually. So Friday would have been the perfect time to open up the put debit spread, but hey, I wasn't a genius enough to do it, but still, I am doing call credit spreads, which are actually down a lot. Now, that's kind of my bad. I'm not perfect. I make mistakes, but I'm not actually sure this is a mistake yet. We're going to see if Nvidia does come back down to 445. That could easily happen, and that's why I'm still holding this trade. And I'm not closing it because I do see that Nvidia is somewhere towards the top of its range. Again, I have a $7,500 position, but the title of this video is a put to debit spread or a bear put spread. So, I think now is an even better time to open that up. So I'm going to go to trade Nvidia options. And, once we open up this position, we just have to talk about managing it. Okay. So that's really the hard part, if you will. But, first things first, we're going to go ahead. We're going to be selling a put option. Okay. I am going to go out about 30 days. 33 days to August 18. If you're watching this in the future, all of my videos are awesome for the future because I'm usually not picking stocks. I don't want to be like a stock picker. I want to teach you the strategies that I'm using. And I also want you to understand why I'm using them and how I'm using them and how I take profit and how I close the position. I want you to understand so you can basically do it for yourself because I don't want to be a guru that just like buy this, sell that. We all know those gurus do well sometimes and then other times they flop. And I want to be here for the long term. So I'd rather teach you how to do this yourself. I do obviously trade myself out of positions, but I prefer you to learn how to fish for yourself because, to be honest, a lot of my students do better than I do. It's not like I'm the biggest genius in the world. Some people can absolutely do better than me. Anyways, let's go to sell put option. We are going to go down, and I personally think that Nvidia is going to go below 440, but it doesn't really matter. Let's just say we think it's going to go below 440. Delta here is 0.36. Funny, it's 0.3636. Volatility here is 44, so the implied volatility is pretty on the high end actually. 44 is good, and the volume here is also very healthy at 1592, and then open interest is actually not as high as the volume. So the volume has been very hot for Nvidia. This actually could tell you that it seems like a lot of people are buying and selling put options. There's a lot of interest here lately because the volume is higher than open interest, and that means that basically on Friday there was double the amount of trades on this specific strike than there was open interest. So that is, pretty unique there. And actually, I like Nvidia because the bid ask spread here is very tight. I really do look for that. So I want to make sure that the bid ask is close. I mean, if it's like 14 and the ask is like 20, well, you are getting absolutely, you're getting drilled. You're getting not a good price. You're getting scammed there on the bid ask. Okay, but this is really good. All right, so I'm gonna go ahead and sell this, and now what I'm going to do is I'm going to be buying one leg higher, so the 445. So I'm going to buy this, okay? And this is going to be a little bit more expensive. So this is a bear put spread. This is a debit put spread. So we are spending money here, okay? We are spending money, which is not really typical of me. But again, I think the market is high. I don't love buying strategies, but on occasion I do them. So on Monday I do plan to open up something like this right here. So basically, if you're watching this in the short term, fantastic. If you're watching in the future, again, it doesn't matter. What you want to do is you want to find a stock that's pretty expensive. It's on the higher end. And that way, if you're doing a put debit spread, you're really benefiting from a stock falling down. So you're making money as the stock falls down. Your options are actually going to be profiting as it goes lower. Okay. Now, there is a limit here. One of the most beautiful benefits, and there's also, I guess, a con, and everything has pros and cons. The pro here on a put debit spread or a bear put spread is that it's a limited amount of money that you're putting up. Okay, you can only lose $210. It's a very relatively small amount. I mean, if you're going to buy a 445 put option, then you can see that it would cost $1,850, but right now it's only costing you $210, and that's because there is a very limited loss potential, but then there's also a defined and limited gain potential. But for me, if I can turn $210 into 290, or specifically if I were to do, let's say, 15 contracts here, nothing too crazy, but 15 contracts, I'd be risking about 3,000 to make about $4,300 in a month, right? So that's $4,000 that I can make a month, or basically on average $1,000 a week on this type of position. Although I wouldn't be opening it up much, if I were to open up a very small portion of my portfolio on my most high confidence plays, then yeah, you can make $4,000 per month on a position like this, which is really amazing if you can do it on a consistent basis. Now you can see right here, you do start off in the red, so you do need Nvidia to fall down. I mean, it would actually have to fall down to 442.90. So if it goes down to 442.90, that's where you start building up your profits. That's where you start making money at expiration. But of course, we did mention closing out this trade and managing this trade. And it's pretty interesting because you can actually make money and get rid of this trade early. You can actually close it out early if you're happy with your profits. So, for example, say that Nvidia is currently at 456. Say that over the next week, Nvidia starts to pull back, and we saw Nvidia pull back, a lot actually. If I go to the 5-day chart, you can see here that it pulled back from 479 down to 454. So that's what? That's like $25. That's literally a $25 fall. Now, if Nvidia even falls down $12, right? Even if it fell down half that much, and the next day, this position would gain a lot of value. In fact, if it fell down by about, let's just say $10, which is really easy, okay, this would be just almost at 445, but your position would actually be up because if it falls down by $10, you're going to be making about $3.90. Now, of course, this is a spread and there's two here, so you're gonna have this option go against you a little bit, but your gain loss will be positive. In fact, your gain loss may be positive by hundreds of dollars. So right here, your $3,000 that you're risking could in fact be $3,500, $3,600 in just one day, which is what obviously makes options so attractive. That would be over a 10% return in one day. So you'd be making about $450, $500 in one day on this position, even if Nvidia doesn't go into the money. So if you're happy with that, if you're happy with like a 10% return in one day, where you make $450 or $500 on a small amount of money, $3,000, then what you can do is you can end up closing out this position early, because Nvidia has basically done what you were hoping it would do in a very short amount of time. So if that happens in a day, or even if it happens in a week and you make 10% a week, that's still obviously a fantastic week. That's a really high amount. So you would cut this position by manually closing it out. Now, me personally, I typically wait until expiration, but for a debit spread, like a put debit spread or bear put spread, what you can do is you can manually close it out. So basically, let's say that you have this position put in place, right? Whether you're using Robinhood, which I am, and I have a special link for you in the description. When you sign up, you get approved for level 3 option trading more often from my experience, and then also you get about I think it's $20 in sign up bonus. Okay, so even if you have to make a new account, I think that could be worth it because many of my students get approved for level 3 much quicker with my link. So go ahead and check that out. No guarantees, but my link could really help you out there. But the max cost right here is 3,000, and I'm using Robinhood personally. Okay, again, like I mentioned, if I open up this position in Robinhood, I can basically close it out in one swoop, right? I can just click a button and click close. Okay, so what I can do is say I already have this position open. Okay, I'm going to get out of this position and I'm going to go into, let's say, coin. Let's say coin. I'm losing money on coin at this very moment. Obviously, I'm doing great, but on this particular trade, I'm not doing great. Okay, so just being honest here with some of my losses here. Not a complete loss yet. I'm still waiting, but again, so what I would do here though is you see how it says close right here. So I like Robinhood because it's super easy. I can just close this trade. So for example, I have 5 contracts. I would just put close. Okay, I would put 5. All right, and then I would put the limit price. Okay, I would use a limit price here because I wouldn't just click review order. You do want to actually pick your price right now. Okay, so you can see here that it's worth about 492. All right, so what I would go for is I would try to get 485. So if I can close this for 485 or even 480, now that's beneficial. That's basically how I would close this losing trade. But a winning trade works very similar. You would just close and you would put the price that you want. So another trade, let's say we bought it for $1, right? We would try to close it for, let's say, 1.5. So we would try to get $1.50 or a 50% gain, right? Or whatever gain that you really want. So you would manually do that. And that's what I like about this platform. Of course, there's other platforms. I think TD Ameritrade actually can like right click and create a closing order. So that's pretty easy in TD Ameritrade, but there's obviously many brokerages, but I prefer this one because it's literally the easiest brokerage for me to use, although I have a couple of others, including TD Ameritrade myself. So I think with the bear put spread, what you need to keep in mind, aside from my example, is that you always want to go slightly out of the money. Okay, so it's pretty beneficial because it's going to be a lot cheaper. So as you saw in our example, we only had to pay 210 to make 290. So we were having a very favorable risk to reward ratio because it's out of the money. Now, if I don't go for an out of the money, I'll show you what I mean by that. So if I go back to Nvidia and I go to buy, or if I go to, sell put option, okay, we can use July 21st. That's fine. We can use another example. So if I go ahead and sell this and then I buy that, okay, this is still out of the money. And that's why I'm getting a favorable return, but it's very barely favorable. Now, if I didn't do that and I went to something like 460, so if I sold that and I bought the 465, you can see here how now I'm spending 330 to just make 170. Now there's a trade-off. That doesn't mean you want to go too down too much, because then Nvidia is unlikely to reach that price. But as you can see, if I do an in the money debit spread, the risk to reward ratio is not as favorable. So I recommend that you go out of the money and that you use a roughly 30 days out expiration. I do prefer monthly options a lot more than weekly nowadays. So if you want more information on this, I do have a playlist on spreads, and I actually have a video right here that you have to watch on spreads, which is like the ultimate guide. It's the only video that you actually need to master spreads.